In this video, we're going to take a beginner's look into how the stock market actually works and answer some of the common questions that people have when investing for the first time. I'll also tell you more about a special report that I put together with today's sponsor, The Motley Fool. That report is available exclusively at fool.com/Arvabelle. It's totally free and it's the only place where you'll be able to get a list of the top 5 stocks that I'm watching because I won't be talking about them anywhere else on this channel. So first, what is a stock? You can think of stock like ownership of a company divided into a lot of tiny little pieces. A stock is one of those pieces. When you buy a share of a company, you own a tiny piece of that company, but we are talking tiny. A company like Amazon, for example, could have hundreds of millions of shares available. As a company improves or demand for that company's stock increases, the price will go up. If demand decreases or the company is doing poorly, the stock price will go down. But you can't buy any company's stock that exists in the world. For a company's stock to be available for people like you and me to buy, the company has to go through something called an IPO, or an initial public offering. This is basically just a process that involves making sure that a company is legitimate, raising money from investors, and deciding what that company is worth. Once a company goes through an IPO successfully, they get a ticker symbol, or that series of letters that represents that company on the stock market, and then it's available for the public to buy. Okay, so that's a stock, but what is the stock market? And what do people mean when they say that the stock market is going up or down? When we say the stock market, it can refer to a couple of things. It may be referring to this whole ecosystem of these stocks, these stock exchanges, and the people buying and selling these stocks. But when we say that the stock market is going up or down, usually what is being referred to is actually a stock market index. If you've ever heard anyone mention the S&P 500 or the Dow Jones, those are both stock market indexes. It's hard to track every single stock that's available on these stock exchanges, so some of these companies or different sectors of the stock market are grouped together in an index. The performance of these companies is averaged together, and they're used to get an idea of what the stock market is doing as a whole. When you hear people say the stock market is up or down, that really means that one of these stock market indexes has gone up or down. That just means that the prices of the stocks within that index have on average increased or decreased. Have you ever heard the phrase buy low, sell high? That's how you make money in the stock market. The goal is to sell stocks for more than you bought them for, exactly like how you would flip items at a garage sale. But there's never a guarantee that the price of the stocks that you bought will go up. There is always a chance that they could go down. After you buy a stock, it could be minutes, days, weeks, or even years before you decide to sell it. If you make money when you sell your stock, that's what we call a gain. If you lose money when you sell a stock, that's what we call a loss. Those are the basics of what goes on in the stock market, but we've still left a couple of questions unanswered. When you're investing, who are you buying from or selling to, and what happens if there's no one to buy your stock? To oversimplify it in a way that's easy to understand, when you sell a stock, or essentially when you hit that sell button, you are selling it to another individual or another party that wants to buy the stock for that same price. If you sell and no one wants to buy at that price, then your order just won't be filled at that price. Depending on what order type you used when you were selling, that order could be canceled. It could just be placed on hold until someone is willing to pay that price that you specified, or it could be filled at the next available price. If you're not sure how order types work or how that affects the buying and selling of stocks, I would definitely recommend going and watching the order types video on this channel that will explain how that works. But what happens if there are actually just no buyers for a stock? Usually this only happens with stocks that have very, very low volume, or in other words, very few people trading it. These stocks usually aren't even available on major stock exchanges like the New York Stock Exchange. Plus, for larger companies that are more popular and that have more people trading it or a higher trading volume, that's when market makers start getting involved. Market makers are just an in-between party that buys and sells stocks from traders to make sure that the market stays liquid and that those stocks keep moving. This is to make sure that there are buyers and sellers for those major companies on those major stock exchanges. Now, this doesn't always mean that they'll give you a good price for the stock. They're just there to make sure that it keeps moving along. They make a tiny commission off of each transaction called the spread. So they are trying to keep those stocks moving, but they are also trying to make a small profit along the way. Once you're ready to invest, where do you actually go to buy stocks? Like, you can't just call up Jeff Bezos and ask him if you can buy Amazon stock. So luckily for just your regular stocks, there isn't any formal process for becoming an investor. You just need to sign up for a brokerage app or a brokerage account, and you'll be able to get started from there. There are a ton of different options to choose from, but once you do sign up with any of these brokerages, you'll then have access to start buying and selling stocks. Some of these platforms are better for longer term investing, some are better for day trading, some have extra features like pre-built portfolios or credit cards or access to financial advisors. It just takes a little research and sometimes testing out a couple of these apps to see which one works best for you. But for the most part, a lot of these apps are pretty similar to each other, so once you learn how to use one of them, you'll have an easier time learning others in the future. So you're signed up for a brokerage, you know what a stock is, but how do you actually find the stocks that you want to invest in? This is going to depend a lot on what your goals actually are with investing. Do you want stocks that are higher growth? Do you want trendier stocks? Do you want to invest in a couple of great companies that are established and hold those for the long term? Do you want to go after stocks that pay you a little extra in dividends for you holding their stocks? Or do you want to skip stocks completely and go with ETFs? Once you answer some of these questions and you narrow down the types of companies and the types of stocks that you actually want to look into, finding the good ones comes down to learning how to research them. The Motley Fool's website is actually a great place to start doing some of your research. Their website has a ton of information and articles that anyone can start their research with. In addition to that, they also offer a stock picking service that's called the Motley Fool Stock Advisor. The Motley Fool's investing philosophy is that investing in great companies for the long term is the most effective path to creating wealth. So if that is your investing philosophy as well, then Motley Fool Stock Advisor may be a good place for you to start finding some of those first stocks. I'm currently looking at 5 companies that I think have a good chance to be big winners and see a lot of growth over the next 5 to 10 years. So I've partnered with Motley Fool, who is today's video sponsor, to put those together in a special report. It's totally free. All you have to do is go to fool.com/Arvabelle and you can get access to that list. It's free and it'll be delivered right to your inbox, and that's the only place that you'll find it because, like I said earlier, I won't be mentioning them in any of my videos on this channel. And when you sign up to get that report, you'll also get a special offer for new members of the Motley Fool Stock Advisor. Motley Fool Stock Advisor is a subscription stock picking service where members gain access to their library of expert stock recommendations, which are aimed at multiplying your net worth. Stock Advisor recommends 2 brand new stocks to its members each month, sent directly to their inbox. Why should you trust the picks from the team at Stock Advisor? Well, their average stock pick has returned over 500% as of when I'm recording this, and that's beating the market by almost 5 times. Again, you can visit fool.com/Arvabelle or check that link in the description to get access to that free report and check out Motley Fool Stock Advisor. So as far as the process to actually start researching these stocks, what I'll usually do is start by Googling the company name that I'm interested in and put investor relations after that. That company's website will usually have a page set up specifically for investors, and on this page they'll have information about the company as well as any reports that come out quarterly or yearly so that you can have a good understanding of what is actually going on internally and financially with that company. Usually they'll also include any other information that indicates how a company is performing or any current projects that they're working on or future goals. This can definitely be a lot of information to look at, but there are a ton of books on investing, and a Google search goes a long way when trying to figure out what these different metrics mean. After that, I'll go and research the company on different websites like The Motley Fool if I want to see any other information or news articles or things like the company rating or CEO rating or things that wouldn't be included on that company's own report page. For me, it then helps to make myself a little spreadsheet with all of the different companies I'm looking at, the current prices of their stocks, and any other information that I feel is important, maybe even some of the pros and cons of some of these companies. Once I have all of those listed out, I'll start to narrow it down to the ones that I'm actually interested in investing in. Hopefully this video gave you a little bit of insight into how the stock market actually works and what goes into starting to pick some of your first stocks. I definitely recommend picking up a book or two on investing and doing a lot of research on Google and YouTube, and really take some time to get familiar with what to look for in different companies' stocks. And remember, you can also get access to that free report of the 5 stocks that I'm watching delivered straight to your inbox by going to fool.com/Arvabelle or by clicking that link in the description. And I will see you guys in the next one.